The markets got pump faked today, ladies and gentlemen. The S&P 500 had a monstrous recovery here in the last 20 minutes or so, and then we did just start to come down in a very dramatic way. We were actually positive, and now we are selling back off again. This really goes to show the instability in the markets, as well as the potential downside that we could see throughout the rest of this week. Institutional investors, they want the markets to go up, they want to sell the rip, and then they want to short the drop. That's exactly what is happening today and happening currently as we speak. Now for AMC stock, AMC is holding up very well, actually going up the same time that the markets are falling. And obviously we just came down a little bit, but we're holding up a lot better, up 1% overall. S&P 500 down close to 0.5%. The NASDAQ barely green. This comes on the news that Twitter accepts Elon Musk buyout deal. Now there is some huge implications for Tesla stock. If Elon has to sell a bunch of Tesla could get destroyed, and that's really what started this massive sell-off. Elon would have to sell like 30 million shares of Tesla to purchase Twitter. So you're definitely seeing a lot of instability in the markets, and that definitely does not help all too much. We'll see where the markets close by the end of the day. We do have a lot of cushion right here to potentially come down to these lows, so we will see. If we do, that's definitely not going to be a good thing. But ladies and gentlemen, we have a lot more to talk about than that here in this video. Hit the like button, subscribe to the channel, do what you guys gotta do. Thank you guys for doing that. If you guys want to come trade with us live in real time, link down below in the pinned comment. We are coming down. We are testing the 100-day moving average on the S&P 500. AMC stock getting a move down, but we have been positive pretty much all day. So AMC stock, a lot of these stocks that are down dramatically are really catching a bid today. A lot of these unprofitable stocks, where a lot of stocks like Tesla, you can see down 2.3%. Apple is down like 1%. Facebook is down like 0.5% today, right? So a lot of your safety stocks are making moves down. A lot of your stocks that have already been beaten down are actually coming up here a bit today. And what that is really showing you is that the safety stocks are getting flushed out and money is heading back into these higher growth non-profitable stocks, and that's what you need to see for a bottom. So I think we're actually getting pretty close to a bottom. Depending what happens with earnings this week, that's going to be the real tell. And you do have Microsoft and Google tomorrow and after hours. Those are going to be the main keys. Wednesday, you have Facebook or Meta, whatever you want to call it, PayPal, for Qualcomm, Pinterest, Teladoc, a lot of important stocks, a lot of important sectors that are, you know, we'll get a glimpse into on Wednesday. And then on Thursday, you have Apple and Amazon. Now, like I said in the last video, you are really seeing a lot of put options coming through for a lot of these large tech stocks, specifically Apple, and that controls about 7% of the S&P. So if Apple has really bad earnings, the markets could get absolutely destroyed. That would flush us out. That would dry up liquidity and really give us some buying pressure to come back in and start to buy the dip and push the stock market back up. That is obviously not a guarantee. I don't know which way Apple earnings are going to go, but if that does happen, you're getting pretty close to a bottom. Now, at the same time as this, if Apple does flush to the downside, these stocks have bad earnings, that's going to, like I said, dry up liquidity. And if AMC can push out a positive catalyst, maybe they have good earnings, you're going to see a lot less capital and collateral that is able to service these margin loans that these hedge funds and institutions have. If AMC can see a rally, you're going to start to force shorts out of their short positions very, very quickly. So keep that in mind. We're either going to hit that bottom and catch a bid in the markets, or we hit that bottom, AMC gets a catalyst, and then we could potentially see the MOAS. Now, my personal belief is that we will see the MOAS closer to like the end of summer, the fall time, but we are definitely seeing this dramatic sell-off a lot faster than I had expected, back down to the downside. We're really sitting in no man's land here on the S&P. We're either coming back up to 450 if earnings are good, or we're coming back down to 400 and gonna hit a new yearly low if earnings are bad. And this chart looks exactly like Apple. So if you look at it like that, if Apple comes down in a dramatic way, then the stock market will come down in a dramatic way. And there's still a lot of meat on the bone for Apple to potentially come down even as low as 120 if earnings are bad. Now, I'm not going to exactly predict 120 for Apple earnings. I don't think anybody could make an accurate prediction like that when it comes to Apple. But still, it could get very, very bad here. Now, for anybody that is playing Twitter, Elon's buyout price is $54.20 per share. So if you have options on that, what will happen is essentially you will get bought out at that $54.20 price. If your break even was higher than that, you're going to lose money. Now, if you bought the stock, you're going to still get bought out at $54.20 per share. So depending where you bought it, you will make some money if obviously you bought it less than that. So that is basically the deal. The S&P is coming back up. Tomorrow is going to be very important with those earnings. AMC stock, I want to pay attention to how it moves. Today was a very, very good sign. Like I said, we're either going to get that flush down. You're going to see the safety stocks really get washed away, and you're going to see a lot of I guess fear come into the markets for a little while, and then you could see a rally from there. Or you could see just liquidity being squeezed. You could see you know, collateral levels going down, right? These stocks that hedge funds have parked their money in, and then you could see a catalyst for AMC, and that's what will really force shorts to cover. If shorts have short positions, right, hedge funds have shorts, they make money when the markets go down, so that kind of helps to offset their stocks that are going down, right? If you have shorts that are going down, you're making money. If you got stocks that are going down, you're losing money, but it kind of hedges itself out. Now, if you get your shorts that start to go against you and they start to go up, now you're losing money on that side, and you're also losing money on your long position. So long story short, that is what could really cause the mess, but you need to see some level of catalyst. Now, the specific data for AMC stock for today, 18 orders totaling $2.91 million, positive order value of 12%. So not very bullish as far as the option activity, but the stock is still up almost 1%, which is quite incredible to be holding this level of strength. As far as the short interest of free float, that is at 19.23%. Current shares that are sold short of 99.11 million. Cost of RMAX of 2.73%. Utilization of 100%, and days to cover sitting at 2.34. So this is still looking very, very encouraging at the current moment. So that is basically the deal on all of that. The max pain for AMC stock, we'll go ahead and pull this up. I don't know if it'll matter too much given we do have big market catalysts, like I said, the GDP numbers as well as earnings, but max pain for AMC by the end of this week is $17.50 per share. And as far as the option activity, you're looking at about 5,000 calls that are in the money, about 96,000 calls that are out of the money. So a decent week, but you really want to see those weekly option buyers, those FOMO buyers, start to step in and start to buy the stock, buy the options. That's what really moves AMC a lot, you know, on these given weeks. That's what caused AMC, after all, to see that 45% day. It was a lot of the weekly options and a lot of the FOMO buyers that did step in. As far as the technical picture for AMC stock, really watch that $15 level. If earnings are bad, it would not surprise me to see AMC fall to $15 per share, and then hopefully we could get a catalyst in there, and that's what could cause the MOAS, or at least a big leg of the MOAS. If not, everything comes down, hits a bottom, that's where you could see a bid for the upside. So I think either way you look at it, we're sitting pretty good here, and it's definitely looking pretty bullish. Now, as far as the Fed funds rate monitor tool, that is still, you know, pretty much 100% chance for the next 3 meetings of getting that 50 basis point rate hike. Next week, you have the Fed meeting, and that is 1 week, 1 day, 22 hours, and 45 minutes away on May 4th at 2 p.m. So not this week, but next week, and that's going to be another very important catalyst. Like I said, you get PCE numbers on Thursday at 8:30 in the morning, as well as GDP numbers at 8:30 in the morning. That mixed with Apple earnings are going to be the things that really do drive the markets one way or the other. So we're gonna watch Tesla as well. Tesla, you know, with the whole Elon deal, that could be a pretty good trade. But nonetheless, that's really what you guys need to know. Either way it looks like AMC is coming close to a bottom. You know, and it looks like we could expect a rally here in the short-term future. At least that's what I am expecting. So thank you guys for watching. Hit the like button, subscribe to the channel. I want to keep these videos nice, short, and sweet as possible because you guys love the short, sweet videos. Nonetheless, come join us on the live stream, 10 p.m. to 11 p.m. Eastern Standard Time every single night, including tonight. Thank you guys for watching, and I'll see you in the next one.